Robinhood and Coinbase, two giants building the next financial super apps. Both promise to transform the way we invest. Both say they're building the future of money.
It's the future.
But in a race this close, who really has the edge? Well, today we're digging beneath the headlines to compare these giants from the inside out. Their origins, features, stock performance, biggest challenges, and of course, which one comes out on top. My name is Guy, and you're watching The Coin Bureau. First though, nothing in this video is financial advice. It's educational content that's meant to inform you about Robinhood and Coinbase. If this is the kind of content you want to get more of, then smash that like button, subscribe to the channel, and ping that notification bell. Okay, let's start with round one, the founders and funding. So, Robinhood's story starts in 2013 with two Stanford graduates, Vladimir Tenev and Baiju Bhatt. Their idea was simple: make stock trading commission-free and put the power of Wall Street in everyone's pocket. Now, at the time, retail traders were paying up to $10 per trade, while the big guys, hedge funds and institutions, paid almost nothing. Tenev and Bhatt had already been building trading tech for these firms, so they knew the system inside out. And the company was named Robinhood for a reason. It was all about leveling the playing field for retail investors. Getting that idea off the ground, though, was not easy. In fact, they pitched more than 70 venture capitalists before anyone would listen. Most still said no. But eventually, in 2013, they landed $3 million in seed funding from some pretty big names: Index Ventures, Andreessen Horowitz, and Tim Draper. From there, Robinhood took off fast. A Series A brought in another $13 million in 2014, and soon enough, Snoop Dogg and Jared Leto were investors too. Over the next few years, the raises kept growing. $50 million here, $110 million there. Then a notable $363 million in 2018. By the time Robinhood went public in July 2021, they'd raised more than $5.6 billion. Now, let's shift gears to Coinbase. Back in 2012, Brian Armstrong, a software engineer who had just spent time in Argentina witnessing inflation firsthand, saw how difficult it was for ordinary people to buy Bitcoin. So he teamed up with Fred Ursum, a former Goldman Sachs trader, and together they launched Coinbase with a simple goal: make crypto safe and accessible for everyone. Coinbase kicked things off with a $150,000 seed investment from Y Combinator, but that was just the beginning. In 2013, they'd raised $5 million in a Series A and $25 million in a Series B. Then, in 2015, Coinbase landed a $75 million funding round with backing from the New York Stock Exchange and USAA, a big deal and a clear sign of traditional finance players putting money behind crypto. Before going public in April 2021, Coinbase had raised a total of over $525 million. Okay, now for round two. How do these platforms actually work? First, Robinhood. Now, for years, its edge was simple: zero commissions on stock trading. Open the app, sign up in minutes, and you're ready to trade stocks, ETFs, options, and crypto. No paperwork or $10 fees. The design is clean, mobile first, and built for a generation that wants everything: investing, retirement, crypto, even a credit card, all in one place. But that raises the question: how does Robinhood actually make money if it isn't charging you? Well, the answer is payment for order flow. Market makers pay Robinhood to route your trades to them, allowing Robinhood to offer commission-free trades. Robinhood also offers premium subscriptions like Robinhood Gold that unlock advanced analytics, higher instant transfers, and better interest on uninvested cash for about $5 a month. There's also the Gold Card, which blends spending and investing by letting you direct your rewards straight into your portfolio. And Robinhood has also started expanding globally, launching tokenized US stocks in Europe and rolling out perpetual futures for advanced traders. If you're in the US, you can stake ETH and Sol, and soon you'll be able to use their AI-powered investing assistant, Cortex. Now, if Robinhood is the super app for everyday finance, then Coinbase is the on-ramp to the crypto economy, and increasingly its back end. Open an account and you can buy, sell, or stake over 300 cryptocurrencies with one of the most user-friendly interfaces in crypto. But Coinbase is becoming more than an exchange, powering everything from on-chain payments to custody for ETFs. The core business, though, is still transaction fees, which are higher than most competitors, but Coinbase justifies them with compliance, security, and ease of use. There's also Coinbase One, a premium subscription with zero-fee trading up to certain monthly limits. Plans start at around $5 a month, but if you want decent trading limits, you'll likely be looking at the $20 tier. For more experienced users, Coinbase offers Coinbase Advanced with professional-grade charting and access to a full, detailed order book. And just like Robinhood, Coinbase has super app dreams, with its new base app bringing together trading, payments, and even a built-in social network. Users can buy, sell, or swap crypto directly in their feed, send USDC with a tap, chat with friends, and access mini-apps, all on Coinbase's base chain. So, how do the fees stack up? Well, on Robinhood you'll find no commissions, but the selection of cryptocurrencies is limited, about 50 as of 2025, compared to Coinbase, which has over 300 cryptos listed. On Coinbase, however, fees can be significant, especially for small trades, unless you're a Coinbase One subscriber. And while both platforms now support crypto transfers and staking, Coinbase offers far more choice, with global access in over 100 countries, while Robinhood is still mainly focused on the US and Europe. But if you're looking to hunt for small-cap cryptos, then Robinhood and Coinbase might not have what you're after. That's where the Coin Bureau Deals page comes in, though. Here you'll find exclusive sign-up bonuses up to $100,000, plus trading fee discounts of up to 50% and cashback offers as high as 75% on some of the top crypto exchanges. Just hit the link in the description or scan the QR code on your screen. Once you're on the deals page, check out all our partner offers and click Sign Up Now to claim your deal. These offers won't last forever though, so make sure to grab them while you can. Now this brings us to round 3, stock price performance. First up, Robinhood. Now when Robinhood went public in July 2021, it listed at $38 a share, giving the company an initial valuation of about $32 billion. Within weeks, the stock shot up to $85, but it fell as quickly as it climbed. By June 2022, Robinhood's stock price had crashed to just under $7, a 92% drop from its highs as trading volumes slumped, the meme stock craze cooled, and questions about the business model started swirling. But here's where it gets interesting. Fast forward to 2025, and Robinhood has staged one of Wall Street's biggest comebacks. Its stock has surged more than 700% from its 2024 August lows and is up nearly 200% year to date. As of August 2025, Robinhood is trading above $100 a share, with a market cap just shy of $100 billion. In terms of valuation, Robinhood's price-to-earnings ratio currently sits around 57x, while its price-to-sales ratio recently clocked in around 28x. Now, for comparison, the average S&P 500 company trades at about 22x forward earnings and just 3x sales. In other words, Robinhood's valuation is much higher than most large US companies. And if you want to learn about another company with even more extreme valuations, then be sure to check out our video on Palantir right over here. Now let's turn to Coinbase, which went public in April 2021 with a direct listing on the Nasdaq, closing its first day at $328 a share. At one point, the company's market value was nearly $100 billion. But as crypto markets soured in 2022, Coinbase's stock price plunged by 80%. Like Robinhood, though, Coinbase's fortunes reversed with the crypto market recovery. Shares are now up more than 800% from their lows and, as of recording, are trading in the low $300, with a market cap just under $80 billion. It's also worth noting that Coinbase got added to the S&P 500 in May 2025, which is no doubt an impressive achievement for a crypto company. Valuation-wise, Coinbase's trailing price-to-earnings ratio currently sits around 29x, while its price-to-sales ratio is about 12x. But besides those headline figures, it's clear that both stocks are more expensive than your average S&P 500 company, though Robinhood trades at especially high multiples, while Coinbase, although still pricey, isn't quite in the same territory. And that brings us to round 4, adoption and growth. How many people are actually using Robinhood and Coinbase, and where is all this growth coming from? Starting with Robinhood, in 2017 it had just 2 million funded accounts. Fast forward to 2025, and the platform sees nearly 13 million monthly active users. And it's especially popular with younger investors, with about 75% of Robinhood users being under 44. For context, this gives Robinhood one of the youngest customer bases in all of finance. And Robinhood's assets under management are now around $279 billion as of Q2 2025, a sharp jump from $221 billion just last quarter. Even more impressively, Robinhood has seen retirement account assets grow from $800 million in Q2 2023 to $19 billion. Another area of growth, meanwhile, has been its aforementioned Gold subscriptions. Gold now boasts 3.5 million subscribers, up 76% year over year. Gold users are the most active, trading more, using more products, and driving up average revenue per user to $151, up 34% from last year. Now, on the crypto side, as of Q2, Robinhood's crypto assets under custody totaled $41 billion. And thanks to the recent acquisition of Bitstamp, Robinhood now holds over 50 international licenses and is expanding its presence in Europe, the UK, Canada, and Asia. But perhaps the most significant move Robinhood is making right now is the development of the Robinhood chain. While tokenized equities for European customers are initially being issued on Arbitrum, Robinhood is now building its own custom blockchain, also using Arbitrum's technology. The plan is to eventually open it up to external developers, which could make it a serious rival to Coinbase's base chain. And speaking of Coinbase, as of Q2 2025, it has over 8.7 million monthly transacting users, with its international reach extending to more than 100 countries. Total assets under management are $245 billion, and Coinbase leads the way in ETF custody, holding more than 80% of all Bitcoin and Ethereum ETF assets for US institutions. Coinbase's ecosystem is also growing on all fronts. In the past year alone, they've launched additional tiers for Coinbase One, the new Coinbase One card with up to 4% Bitcoin rewards, and partnerships with the likes of JP Morgan and Shopify. And of course, there's Base, Coinbase's Ethereum Layer 2, which currently boasts close to $5 billion in total value locked, over 1 million monthly active addresses, and billions in monthly transactions. Coinbase is also looking to move deeper into the traditional finance world. Following in Robinhood's footsteps, it's now seeking regulatory approval to offer its own tokenized equities, with a formal application to US regulators submitted back in June. Now, this pertains to round 5, and that's challenges. The first challenge both companies face is regulations. Robinhood's payment for order flow model, where market makers pay to route trades, has drawn plenty of heat from lawmakers in the US. And now that Robinhood is expanding into tokenized stocks, futures, and even prediction markets, every new feature invites a fresh round of regulatory scrutiny. Case in point, the European Union has already passed a ban on payment for order flow, which will take effect at the end of 2026. If the US ever follows suit, Robinhood's core business model could face real pressure. And while its new products are attracting headlines and users, they also add complexity. The launch of tokenized stocks in Europe has already sparked controversy, especially around private company tokens like OpenAI and SpaceX. And because of concerns about investor protection and transparency, Robinhood is currently only gifting these tokens to users, not opening them up for public trading, at least for now. For Coinbase, however, the regulatory picture is looking brighter than ever. The company spends more on compliance than just about any other crypto exchange, and for years, US regulators were always moving their target from one exchange to the next. But in 2025, things started looking up. The passage of the Genius Act and the Clarity Act finally brought some real legal certainty for stablecoins and digital assets, and the era of the SEC's regulation by enforcement is finally behind us. Let's just hope these positive tailwinds stick around, even as political currents shift. Another challenge both companies face is security. Just this May, Coinbase reported a significant cybersecurity breach costing over $300 million in customer reimbursements and legal fees. For a company that's built its brand on trust, that is a real wake-up call. That said, though, Robinhood hasn't been spotless on this front either. In 2025, it paid $45 million to settle a data breach, and back in 2021, it faced a $70 million settlement with FINRA for outages and misleading customers. At the same time, competition is also becoming a bigger challenge for both companies. Robinhood is fending off both traditional brokers like Fidelity and Charles Schwab and fintechs like SoFi and Chime, all racing to become the one-stop shop for retail finance. Its edge has always been simplicity and speed, but now everyone else is playing catch-up. Additionally, the GameStop controversy in 2021 still lingers in the background, serving as a reminder that public trust can vanish overnight. Coinbase, for its part, is feeling pressure from every direction. Banks like JP Morgan are moving into crypto, while global giants like Binance and OKX are competing hard for trading volume. Even big tech companies are starting to eye up this space. And with fees still high, Coinbase may need to adapt quickly if competitors start matching its ease of use and security. All right then, gloves down. Who actually comes out on top? Well, let's take it from round one, the founders and funding. Now, Robinhood arguably wins this round, especially when you consider just how tough it was for the founders to sell Silicon Valley on commission-free trading back in 2013. Over 70 rejections later, they finally got that first seed round, and the rest is history. Robinhood's disruption forced an entire industry to adapt, which is the kind of impact that isn't easy to replicate. Coinbase started just a year earlier, and while they have undoubtedly set a standard for compliance and trust from day one, its impact simply hasn't been as profound as Robinhood's. Moving on, round two, user experience and platform features. Now, Robinhood is the undisputed champion of simplicity. Open the app and you've got stocks, crypto, options, retirement, even a credit card, all just a tap away. Coinbase, on the other hand, has become the heavyweight of crypto infrastructure. The platform supports a wide array of coins, offers staking, advanced charting, deep liquidity, and its own Ethereum Layer 2 chain. And while fees are higher, users get world-class custody, access to DeFi, and a steady stream of product upgrades. But if you want everything in one place, stocks, cards, and a mobile-first super app, Robinhood also takes this round. Now, round three is where the market has had its say. Robinhood's journey has been a true rollercoaster. After a blockbuster IPO in 2021, the price crashed and was essentially written off for years. But then it made that impressive comeback, hitting all-time highs in 2025. That kind of turnaround is rare and shows Robinhood's ability to pivot and adapt. Coinbase's journey, though, has been just as bumpy. Strongly correlated to the crypto market, Coinbase has also staged a major comeback and even earned inclusion in the S&P 500, something Robinhood hasn't yet achieved. But from a valuations perspective, Coinbase is trading at lower price-to-earnings and price-to-sales ratios than Robinhood, and its overall market cap is still lower. So you could argue there's more growth potential left in the tank for Coinbase, especially if Wall Street keeps warming up to crypto. So for that reason, we'd say round three goes to Coinbase. Okay, round four, adoption and growth, is where things really get interesting. Robinhood leads in raw user numbers, close to 13 million monthly active users, most of them under 44, and a surge in gold subscriptions and international expansion. It's growing fast, and every new feature seems to drive up engagement and average revenue per user. But Coinbase plays a different game. It may have fewer total users, but it manages $245 billion in assets, nearly as much as Robinhood, despite having a smaller user base. And it serves not just individuals, but institutions, and most importantly, ETF issuers. For most new crypto investors, Coinbase is their first stop, offering a much broader selection of digital assets than Robinhood. Its base chain is also quickly becoming one of the most prominent Layer 2s on Ethereum, attracting developers, projects, and capital. And now, with moves into TradFi partnerships and new product launches, Coinbase is increasingly diversifying into the traditional finance space. And you could argue that it's much harder for competitors to catch up to Coinbase in crypto than it is to challenge Robinhood in traditional finance, where there's already plenty of competition. So, round 4 will also give to Coinbase. And this brings us to the final round, where we're tied 2 for 2. That seems fitting though, since both Robinhood and Coinbase faced the same challenges, taking on new regulatory, technological, and operational challenges as they launch new features and expand across both crypto and traditional finance. That's why, for now, we're leaving this round at a tie. So, where exactly does that leave us? Well, at the end of the day, it really comes down to what you value most. Both companies are pushing boundaries, and in many ways both are winning, each in their own lane. While Robinhood and Coinbase are pushing into each other's territories, aiming to become true financial super apps, it's still too early to say for sure if either will come out on top. As always, only time will tell. And if you enjoyed this deep dive, be sure to check out our latest video right over here. And if you haven't subscribed to the channel yet, you can do so right over here. Okay, thank you all so much for watching, and I'll see you again very soon. This is Guy, signing off.